morning and thanks for tuning in. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. U.S. President Donald Trump has warned that the U.S. will impose additional tariffs on China if talks between him and Chinese President Xi Jinping do not go as planned. The Reserve Bank of India has allowed companies to process transactions overseas but has asserted that the data will only be stored in India. Larsen & Toubro has moved one step closer to complete the acquisition of IT firm Mindtree. The company acquired a majority stake in the company on Wednesday. Hdfc Bank is said to be planning a 10,000 crore IPO of its NBFC arm HDB Financial Services. Bloomberg reports that it has appointed Bank of America and Morgan Stanley to manage the issue. And India Mart's IPO has been subscribed over 36 times according to data on the exchanges. The issue was fully subscribed on Tuesday itself. Let's start with the action on Wall Street. It was a bit of a lackluster day of trade for the benchmark indices. Trade tensions outweighed the optimism witnessed by technology stocks. Bets that the Federal Reserve will cut rates steeply also dwindled. Ranita Young of Bloomberg News takes you through the key highlights of that Wall Street session in this report.
U.S. stocks ended lower on Wednesday, and the S&P 500 swung between gains and losses as trade concerns outweighed strength in the tech industry. Investors also pared back bets that the Federal Reserve would make steep cuts to interest rates next month. Now, we did see quite a few movers, specifically in the semiconductor area, with Micron Technology rising the most since December 2011 after posting strong earnings. That helped to lift its peers in the space like NVIDIA and Advanced Micro Devices, and together they all helped to lift the Philadelphia Semiconductor Index to the highest level in more than a month. Meanwhile, WTI was higher, and it reached the highest in more than 4 weeks on a supply squeeze, and Bitcoin surged past that $13,000 level to its highest since January 2018. And we also saw treasuries and gold lose a little bit of steam there. The yellow metal saw its first retreat in more than a week. And that's a look at your Wednesday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right, let's also take a look at the Asian markets. Sophie Kamruddin is joining us live to tell you all about that. Good morning, Sophie. How's it looking where you're sitting? How are the Asian markets looking to you?
Well, this Thursday, it's a broadly unexciting session with Asian stocks making modest gains, bonds falling, with the yen retracing some of its overnight drop, which was the biggest since April, and gold just holding steady after the overnight decline, just flirting with that 1410 mark, and oil losing ground from a 5-week high. Now, in equity markets, tech is leading sectoral gains in the region. Japan Display is among the best performers, surging as much as 32% on a news report that Apple is to invest $100 million into the Japanese company. And on the other side of the spectrum, Chinese tech firm Dawning Information is falling as much as 10% after resuming trade today. Now, the stock was suspended on June 24th after being added to the U.S. blacklist for export restrictions. So that's the look, the land, and the countdown to the G20 summit, and of course the Trump-Xi meeting. Back to you.
All right, thanks so much for that, Sophie. Now, as the countdown towards the meeting between U.S. President Donald Trump and Chinese President Xi Jinping draws closer, well, the U.S. president has stepped up his tariff rhetoric. He said that he has a plan B for China if talks with Xi Jinping do not go as planned. This comes just a day after saying that the U.S. was willing to suspend tariffs ahead of the talks with China. Stephen Engel of Bloomberg News reports from Osaka.
That's going to be really the primary focus, of course, on the sidelines of the G20 on Saturday when President Xi Jinping meets with President Donald Trump. Of course, there'll be lots of speculation on what possibly those two gentlemen can talk about. Well, we know what they're going to talk about, whether they can reach agreement on a path forward. That's really perhaps the best case scenario. No one's expecting details of a lasting trade deal from this meeting, given the impasse that the two sides are in right now. However, if you look back 7 months to Buenos Aires and the last time the the G20 met exactly 7 months ago, there was a 90-day truce announced, and that gave the markets a bit of a lift, and we know where it ended after 90 days or so, or a little bit after that. Talks fell apart, and we're at the impasse we are now. So any kind of dialogue between the two gentlemen and any kind of path forward for dialogue to continue is a good sign. But we're getting mixed signals, and that's where we're all a bit confused. Sources are telling Bloomberg News that the U.S. may be willing to suspend the next round of threatened tariffs on $300 billion worth of Chinese goods if there is progress or a willingness by the Chinese to come back to the table. That is coming from Steve Mnuchin, the U.S. Treasury Secretary, who says perhaps we're about 90% the way there, with another 10% to go on those tough issues. However, Donald Trump in another interview came out and said, wait a minute, we might be actually going towards Plan B instead of Plan A. And Plan B is his Plan A, and that would be to inflict those new tariffs on $300 billion worth of goods. He also alluded to the fact that it might not be 25%, it might be less at 10%, but there's a lot of uncertainty, obviously, and any readings we get from Xi Jinping and Donald Trump will be a good thing.
All right, we'll all have to wait for that meeting to take place. In the meanwhile, India is looking to benefit from the tensions between the US and China. It is looking to invite companies moving out of China to set up shop and create jobs right here in India. It is also looking to cut its trade deficit with China. Harsha Subramaniam brings us more from New York.
What you're seeing, the proposal to offer incentives to companies that are moving out of China is one indication of what the government is thinking. Essentially, it wants to leverage the opportunity of the U.S. trade war with China and see if it can get some opportunity in between. But you've got to look at it in the larger context. One is Prime Minister Modi's Make in India campaign, which he kicked off in the first innings of his government, was broadly inviting companies to come and invest in India and create jobs. Remember, there is a serious jobs crisis in India, and India is hoping that it would kickstart its manufacturing sector and offering incentives, tax holiday for companies to want to set up shop, maybe one effort in that direction. But having said that, this is just at a proposal stage, Guy. But the larger problem of what's going on with the Indo-US relations is concerned. On one hand, President Trump has been pushing India or wanting India to be a strategic partner, a partner for security in the Indo-Pacific region. He wants India to sort of collaborate on combating terrorism to counterbalance China. On the other hand, you have India has been identified as one of those countries where the United States wants to reduce its trade deficit to the tune of $21 billion. So what India wants out of this is to de-escalate tensions, normalize the relationship between the two countries. Secretary Pompeo's visit therefore becomes extremely critical in sort of normalizing relations before President Trump meets with Prime Minister Modi later this week at the G20.
There were still reports of little progress in resolving any kind of disputes, be they over trade, defense, energy, and they're weighing on the partnership. I mean, how did the Secretary's visit help?
There are two aspects to this. The one aspect is the escalation per se. Washington withdrew trade concessions on India to the tune of $5.6 billion. India retaliated by a tit-for-tat action, high tariff on a slew of products like almonds and apples to the tune of about $200 million. The question right now is this just an aberration in this relationship, or is there a fundamental divergence between the relationship between India and the United States? The Modi government is hoping it's the former. If it's an aberration, then all it requires is for Prime Minister Modi to work his charm with President Trump and ensure that some of these trade issues are sorted out immediately. There is a larger, broader relationship that Washington enjoys with New Delhi on a whole host of issues. It would not serve Prime Minister Modi's purpose to antagonize the United States on issues of trade when there is so much at stake. Remember, India's economy is slowing down. Prime Minister Modi has just begun his second innings. He needs investments in capital infrastructure. He needs a lot of money coming in from the United States, and therefore partnering the United States, there's a lot more at stake for India than for United States.
All right, with that, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and what's happening in the futures and options space. Good morning, Agam. How are we looking today?
Well, flat again, Alex, at least as far as SGX Nifty is concerned. Not too much to speak for, and we're not getting too many cues either right now. A consolidation expected. It is expiry week, and we may see some amount of movements today, but it was a wait and watch. But let's take a look at how indices fared. And, well, second straight days of gains, a surprising one. And, well, it certainly turned out to be a good one considering the broader markets did also see some advances, as was the case for the banking indices, which also were up and about. In fact, the PSU banking index did much better and outperformed. And coming down to your your ADRs of strength seen in Vedanta, followed by Tata Motors, Dr. Reddy's, and ICICI Bank. And, well, all the indices, or rather all the stocks on the ADRs, well, turned out with gains today. But moving on to your FII flows, and there has been very little action here. Just about 100 odd crores on a net basis bought by FIIs and 51 odd crores sold by DIs. So there's hardly much to talk about here. But contributors, once again, it was Hdfc Bank and ICICI Bank, followed by L&T. And we'll be watching out for some of these names as we move into trade today. But let's talk about the futures and options space because it is expiry. And, well, we are keeping an eye on rollovers at 55%, largely in line with at the previous 3-month average. As is the case for the Nifty banking rollovers, which stand at around 50%. Moving on to, well, your open interest distribution, we have about 300-point range. This hasn't changed in the last 1 week. And, well, in terms of changes in open interest, unwinding seen in the 11,800 call. As far as your VIX is concerned, it's down 2% at around 14.8. Again, what we are keeping an eye on is a number above 16, 16.5. That is where we could see some amount of, well, increase in volatility, but this, it doesn't mean too much. And, of course, the put call ratio has hedged up higher to around 1.6. Moving on, we do have a bunch of stocks which are in the F&O band: IDBI Bank, Adani Power, and we also have Jet Airways and Reliance Capital in the F&O band. Besides that, we're also talking about a whole host of stocks which will move out of the F&O segment. And some of these prominent names will include the likes of DCB Bank, Jet Airways, Reliance Power. Of course, a lot of traders and perhaps market commentators have also earlier suggested and questioned the reason why likes of Suzlon and, well, some of the JP companies are still in the F&O segment. Well, those companies will also be moving out, and they will be resuming trade only in the cash segment. So those are some of the stocks that we will also be keeping an eye on as we move into trade today, Alex.
Thanks so much for that, Agam.
Yep.
All right, let's take a look at what's making headlines across the globe. Selena Wang of Bloomberg News brings you the first word headlines.
Thousands of protesters rallied in Hong Kong on Wednesday night, keeping up the pressure on the government and on China ahead of the G20 summit this weekend. Activists delivered appeals for support to local consulates, asking for backing in the campaign to withdraw Hong Kong's controversial extradition bill. Chief Executive Carrie Lam has shelved the idea, but is refusing to formally abandon the plan. Iran is set to breach the terms of the 2015 nuclear deal later Thursday, piling pressure on European powers attempting to deal with the fallout of U.S. sanctions and fears of war in the Gulf. The Atomic Energy Agency in Tehran says it will exceed the agreed limit on stocks of low-grade uranium in the coming hours and may raise enrichment beyond the level that prevents the making of weapons-grade material. The trade war is biting especially hard on businesses operating in Asia, with companies reporting more delays or cancellation of investment than a year ago. The American Chamber of Commerce in Singapore says the effects are cited by 54% of companies surveyed, up from 4% from late 2018. More businesses are also considering moving supply chains away from China and the United States. President Trump is praising ECB boss Mario Draghi, saying he should be holding the reins at the Fed, not Jerome Powell. Speaking to Fox, he reiterated his claim that he has the right to fire the Fed chief and tweeted that policymakers blew it last week when they kept rates on hold. Earlier this week, the president had attacked Draghi for signaling more stimulus could be on the way for the Eurozone. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Selena Wang. This is Bloomberg.
All right, reports emerging that Rosto Ravanan, who is the CEO of Mindtree, is likely to step down soon as L&T inches closer to the takeover of Mindtree. I'm joined now by Sajid Mangat, who is joining us on the phone line to tell you all about the open offer that's currently on and really how much L&T currently holds, how much is that likely to go, where things stand. Sajid, good morning. How much really at this point does L&T own, and where's that likely to go? How much have the shareholders tendered?
Okay, the open offer is expected to close in June 28th, and as per the data available on the stock exchanges on Wednesday evening, we understand that L&T has secured almost more than 30% stake through the open offer due to tendering by all the investors. It is, to put it in perspective, L&T had already acquired nearly 20% from Vijay Siddhartha, and then it went on to acquire nearly 8.9% from open market before the open offer began. So in total, L&T has close to 53% stake in the company, giving it a majority control in the company, and that could that also means that L&T now will be having a majority representation on the board of Mindtree. The company has already asked for 3 board members to be inducted, which includes the CEO of L&T, which is S.N. Subramaniam, the CFO Shankar Raman, and the whole-time director J.D. Patil. These 3 members, senior members of the L&T board, will be part of the Mindtree board as well. In addition, there will be 2 independent directors as well, which will be inducted into the board after shareholder approval comes on July 16 in the AGM. If you look at the profile of the investors who have tendered, nearly 70% of them are foreign institutional investors who have tendered their shares in the open offer. Mutual funds come next, and then body corporates and individuals, which are the ones. In total, L&T looks to acquire nearly 66% from all 3 modes of acquisitions. Once the open offer is completed, it may resume open market purchases till it gets around 66% stake in the company.
All right. Well, thanks so much for that, Sajid. Those are the levels. If you want to look at that story in a little more detail, it's available on the website bloombergquint.com. Let's talk about the stocks that you need to watch out for in trade today. Mishika Parak is joining us to tell you all about the stocks and news. Good morning, Mishika. What's likely to be at center of action today?
Good morning, Alex. The first stock we're looking at is Tech Realty. The company plans to create a large portfolio with an investment of over 5,000 crore rupees in commercial and retail properties over the next 4 years. Then we have a downgrade for Reliance Infra. Care Ratings have downgraded the ratings on the long-term facilities and short-term facilities to D from B and A4. NCD's ratings have been moved to C from B, and the revision takes into account the ongoing delays in debt servicing. Further, the revision in long-term rating assigned to the NCD's issues factor in the deterioration in the credit risk profile. Africa Airtel, a unit of India's Bharti Airtel, is to price London's listing at bottom of the range. They're going to issue shares at 80 pence per share, and this issue has already been oversubscribed. Welspun India has entered into a joint venture with Germany's Sense Organics and has acquired 51% stake in its Myanmar arm. It will be investing up to $140,000 during the year 2019 as a part of the company's sustainable sourcing strategy. Then we have an IPO in news. India Mart Intermesh IPO subscribed 36.2 times on the final day. Lastly, let's have a look at the important bulk deal. True North Fund sold 3.7 crore shares, which is 7.4% of Aster DM Healthcare at 120 rupees each. The buyers include Ontario Pension, HDFC Mutual Fund, Fidelity, Steenberg India, and Tata AIA Life Insurance.
All right. Thanks so much for that, Mishika. Let's tell you some of the stories that you'll find on the website bloombergquint.com. We've already spoken about a couple, but I've got a couple more to tell you about. More than a year after the Reserve Bank of India has asked all payment system operators to store transaction data only in India, the regulator has issued clarifications on some aspects of its rules. The clarifications allow payment companies to process transactions overseas, but say that the data must eventually be stored in India. That's a pretty big update, and we'll have to see how the payment system changes after this point. The Securities and Exchange Board of India may tighten its norms on disclosures of pledged shares by promoters of listed firms amid growing number of cases of shares seeing a free fall or plummeting due to post-default distress sale of such securities by lenders. Right, before we close, I do want to tell you about this tab that we've opened up. It's a more comprehensive look on personal finance. So in case you're interested in how to file your income tax, we've recently did a show, and in fact we did a story on that. We also have podcasts running under the title BQ Big Decisions. And we also have several stories under the title Portfolio that you should check out whenever you get the time. All right, well, that's all we have for you in this edition of All You Need to Know. Do stay tuned. There's a lot more coming up. This is Bloomberg Quint.